The euro and the other risk-sensitive currencies such as the Australian dollar are trading under pressure today. The euro dipped briefly after the IFO survey of German business sentiment came in below the market expectations. Right now, you're on your screen that's trading below 1.45. Commodity currencies have also given up some of their gains. The Australian dollar and New Zealand dollar have declined in the day today. The Swiss franc has failed to benefit from the risk aversion and remained mostly unchanged during the day. The dollar index in the meanwhile is also trading slightly lower against the basket of currencies, 73.75 on your screens. The Indian rupee is trading under pressure, tracking the euro and sluggish equity markets here in India. Rupee on your screens at 45.98, nearly a percentage point of decline coming in for that one. Let's get in our guest then, and Moses Harding, Executive Vice President and Head, Global Markets Group, IndusInd Bank, now joins us live in Mumbai. Mr. Harding, hi, welcome to the show. Let's start with the Indian rupee first, and there's lots of seesawing that you've seen happen into that one. What range are you working with, and what direction do you see rupee taking?
Actually, it has been a very volatile rupee market since mid of July. We have seen back and forth move from 46 to all the way to 43.85 and back to 46. So it was whipsaw, and it caught most of the market participants on the wrong foot, I should say. Actually, if you go into the details of why such a fast and swift depreciation from 43 to 85 to 46, I think all started with lumpy, large ticket cash demand started from the Iran oil payment, then defense payment and payment from the IOC. And these large value cash demand was big enough to met with the cash supplies, and also the forward premium dropped from over 7% to below 3% during this time, mainly on dollar liquidity squeeze in the domestic system. So all this put together, I think, gave a tremendous push for rupee from 43.85 to 46. And as of now, as we speak, things are bearish. The next 2-3 trading days will be driven by demand in the market, so that can take the rupee to around 46.35 to 46.50 if RBI is not coming forward to bridge the demand-supply gap.
Much of the markets now are awaiting for Bernanke's speech on Friday. I mean, are you looking at something market moving to come on Friday, and what kind of an impact can it have on the markets?
I think the expectation from Fed is that they will not like to give unpleasant surprises into the market when things are bad and bearish. I am looking for some pleasant surprise announcement from the Fed that should cheer up the global stock market, and also kind of release the risk aversion that has been built up. Investors are looking to stay in cash. That's why you have seen the bond rally across all markets, even in India. So this risk aversion needs to be diluted with some feel-good announcement by the Fed. I think that will be important to cheer up the global markets and the economies.
One word on the euro as well, and I mean, are you surprised with the kind of resilience that euro has been holding around 1.42 to 1.45 kind of a range for the last couple of weeks now?
In fact, as I said to you before, it's very little to choose between the dollar and the euro. Both are equally good or equally bad. So that gives a consolidation mode between 140 and 145. And given that the three heavyweights in the world, the US, France and Germany, will come together to help out the global economy, I think there has been a dilution in the risk aversion that has helped euro-dollar. So probably now euro-dollar should be range bound between 142 to 147, and some positive news from Fed and the Jackson Hole meet should push the range to 145 to 150.
All right, Mr. Harding, we'll let you go at that. Thank you so much for joining us. The dollar might see some kind of a support coming in, while the rupee could depreciate in coming couple of days, is what IndusInd Bank says. Their target for the coming 2 to 3 sessions is around 46.50 in the market there.